Imagine this. The stock market is at all-time highs. Unemployment is near record lows. GDP is growing. By every official metric, the American economy has never been stronger. So why does it feel like everything is falling apart? Why can a family of 4 no longer survive on a single income? Why are credit card delinquencies at a 12-year high? Why are 60% of Americans living paycheck to paycheck? Here is what almost no one is telling you. The economy hasn't collapsed yet, not because it's strong, but because we've been propped up by the most dangerous financial experiment in history. And when those props finally give way, the collapse won't look like 2008. It will look like something far worse. Let me show you exactly what's holding this together and why it can't last. First, the stock market. You've seen the headlines, S&P 500 hitting new records almost weekly. But here's what they don't tell you. Nearly 70% of those gains since 2020 came from just 7 companies. The Magnificent Seven: Apple, Microsoft, Nvidia, Amazon, Meta, Tesla, Alphabet. Take those 7 out, and the rest of the market has barely moved. This isn't a booming economy. This is a concentration mirage. Second, the jobs numbers. Unemployment at 3.8% sounds great. But dig into the data. Over the last 2 years, a staggering number of new jobs came from the Bureau of Labor Statistics' own revision estimates, not actual hiring. And of the jobs that were real, the majority were part-time or gig work. One economist put it this way: "We didn't create jobs. We split full-time jobs into 2 part-time ones and counted them twice." Third, and this is the one that should keep you up at night: the artificial floor. Since 2020, the federal government has injected over $8 trillion into the economy through stimulus checks, PPP loans, and direct subsidies. That money didn't come from revenue, it came from debt. The national debt just crossed $36 trillion. Interest payments on that debt alone now exceed the entire defense budget. Let me say that again. The United States pays more to service its debt than it spends on its military. So why hasn't it collapsed? 3 words: the Fed's printing press. Every time the system starts to crack, the Federal Reserve steps in. They cut rates. They pump liquidity. They buy bonds. They do whatever it takes to keep the plates spinning. It worked in 2008. It worked in 2020. But each intervention requires a bigger dose than the last, and each one pushes the inevitable collapse further out and makes it bigger when it arrives. Think of it like a dam. Every crack that appears gets patched with more concrete, but the water pressure keeps building. At some point, there won't be enough concrete. And when that dam breaks, it won't be a slow leak. It will be a flood. Here is what that flood looks like. Bond markets are already flashing warning signs. The yield curve, which has predicted every recession for the last 60 years, inverted in 2022 and hasn't fully normalized. Foreign governments are quietly dumping U.S. treasuries at record pace. China alone has sold off nearly $500 billion in U.S. debt over the past 4 years. Even Japan, our largest foreign creditor, is reducing its holdings. And then there's the commercial real estate time bomb. Office buildings across America are sitting empty. Loans on those buildings are coming due. Banks are holding trillions in underwater commercial loans they haven't written off yet. When those loans reset at today's rates, defaults will cascade through regional banks, just like they did with Silicon Valley Bank. Except this time, it won't be one bank. It will be hundreds. So what do? You can't stop the dam from breaking, but you can choose where you're standing when the water hits. The people who survived the 2008 collapse weren't the ones who saw it coming. They were the ones who positioned themselves before it arrived. They moved savings into hard assets. They reduced exposure to overvalued equities. They built income streams that didn't depend on a single employer. The economy hasn't collapsed yet, but the warning signs are everywhere. The only question is whether you'll read them in time. If this helped you see what's really happening, subscribe.